Hello there, this is forexbrokers.net, and this is the third video part of contracting triangles, how to deal with contracting triangles. And so far in the first two parts we've discussed the concept of a symmetrical triangle, which is a continuation pattern in the sense that the market breaks in the same direction as the previous trend. We also discussed the concept of a descending and ascending triangle, which is also a continuation pattern in the sense that the market breaks in the same direction of the previous trend. We looked at how to interpret a contracting triangle based on the measure move, which is calculated by projecting the longest segment of the triangular pattern from the moment that the triangle ends. We also uncovered the B2D and the ANC trend lines, and also the apex of a contracting triangle. And this is a triangle as a reversal pattern. To give you an example as a triangle as a reversal pattern in the currency market, the euro and the US dollar, if we zoom out, recently formed or broke higher after a bearish trend. So this was the bearish trend on the euro and the US dollar coming down from 1.25, and then by the time that it reached in 2020 in March, by the time that it reached this area here, you see that it forms a low and then a high and then a lower low and then a lower high, a higher low, and so on. The price action contracting into a tight area before it broke. Well, this was a bearish trend moving up to this point from 1.25 to all the way to 1.06, and then the market formed a triangle that acted as a reversal pattern. How come? Well, if we take a trend line and we connect these highs from here to here, and then we connect these ones from here to here, from here to here, we see that actually the market formed what? Imagine from here from here A, B, C, D, E, and then the market broke high. In this arrangement, this is called a triangle as a reversal pattern, because on the previous move lower, the market failed to continue and it reversed. Or another arrangement, or a better arrangement for this scenario would be this to be the B2D trend line. This would be the B2D trend line like this, and this to be the ANC trend line. So A, B, C, D, with the E wave going way into the territory of the B2D, of the ANC trend line, and then the market breaking the B2D trend line. If you project this one on the right side, you see that the B2D trend line, after it was broken, it was retested, which happens often. And then the measure move, you can calculate the measure move judging by the length of the longest segment of the triangle. This is the longest segment of the triangle from here to here. You project it from the moment the triangle ended, from here. And that is the minimum distance that the market will travel. And also, as explained on the previous video, some traders use aggressive trail stopping in order to make the most of a triangle. So this is yet another example of what a triangle as a reversal pattern looks like. But triangles, coming back to the theoretical part, contracting triangles are also running triangles. What does it mean, a running triangle? A running triangle, and this time we will use a bearish example. A running triangle forms, for instance, you have a move to the downside, and then the market suddenly reverses. But when it reverses, it does so in a very shy mode, something like this, the first segment. Then the market makes a new low, and then corrects again, and then makes a new low, a new lower low, like this, and then corrects again, only to see, due to an interest rate decision, due to an important development, or simply because the market collapsed, only to see a move like this. Well, what is this? How do we call this one? This is called the triangular pattern. And the triangle, because it starts at a higher point than the point that it ends. This is the starting point and this is the ending point. Because of this distance, because of this rectangle that you see here, this is called a running triangle. How to label it? Well, we use the same principles for a running triangle. If we label it with A, B, C, D, and the E wave, this is how our triangle looks like. Of course, we connect the B to D trend lines and the A and C trend lines. These trend lines are important to note the aggressiveness of the contracting angle, also to find out the apex of the triangle, and it is easy to spot the triangle. See here, this is a parallel line with the ANC trend line. If we project it from the B point, we see that this is a parallel line, and then we go with the B to D trend line and we find out that the triangle actually contracts. The end of the triangle is at the E wave point. We may also want to find out the apex. We project this one here. The apex means the intersection point between the A and C and the B to D trend lines. Now this one, let's try to take this one like this, and then we project it all the way to here, and this is the apex point. We want to mark the apex point as a future support and resistance for price levels. This would be, and this is a running triangle. So what's the catch, you might say? What's the difference between a running triangle, running contracting triangle, and a normal triangle? Well, the idea is that the measure move of a running triangle is much bigger than the one of a normal triangle. In a running triangle, you still measure the longest segment of the triangle, which is the B wave. Let's put it here. Then we take a Fibonacci retracement or Fibonacci expansion. It doesn't quite matter. Let's go for a Fibonacci retracement level. You measure it from here to here, and the measure move of such a running triangle exceeds 175% of the first segment. Now, you may either edit the Fibonacci tool to find out 175, or use the 168 just to have an approximate idea of the length of the measure move, so something from here to here. This is good for the measure move. So if we take the measure move and we apply it on here, and we project it from the end of the triangle, from the end of the E wave, this is the minimum distance that the market should travel. As you can see, it goes beyond the apex. Let me delete these ones. So this is how a running triangle looks like in theory. In reality, it looks just like that, but you need a bit of an imagination to trade it. For instance, let's zoom out, and then we need to go a bit back in time when the euro US dollar dropped from 1.40 all the way here. It made this consolidation area here is actually better viewed on the daily chart, and then it formed nothing but a running triangle all the way to here. So you can imagine an A, B, C, D, E somewhere here, following the same rules, A, B, C, D, E. The triangle started here, it ended here. This is where the third wave with the Elliott waves continued, and the measure move of the triangle is 175% when compared with the longest wave, which is always the B wave in such a triangle. So let's go back to our theoretical part. I invite you to go there on the euro US dollar and to practice on the triangle, to see how the rules are respected on the running triangle. And remember here the rules of a contracting triangle. A symmetrical triangle, which acts as a continuation pattern. A descending triangle or an ascending triangle is a continuation pattern as well. Triangles very often appear as reversal patterns, but they also are running triangles. Throughout this academy, we already covered descending triangles and so on, but at this point in time, putting everything together helps you form a better understanding of this concept. Bye bye.